What's going on, everybody? So let's take a look at today's tape. Okay, so if we just get started and we do look at the triple Qs, massive day today for the Nasdaq 100 stocks. We are up $3.71, 1 point on the day. But the more significant thing that is going on here is, could we have seen the short-term bottom? Now, we can never really predict or try to guess what the bottom is, what the top is. But by looking at the technical levels, looking at the moving averages here, and just kind of like noticing what is going on in the market today was if you watched my video from yesterday where I talked about the triple Qs in the Nasdaq 100, what I was really talking about was today or tomorrow was going to be very significant for the tech stocks, for speculation money, for the overall market in general. And I'm talking about the big boys of the world. I'm talking about Shopify, Amazon, Roku, Facebook, Netflix, Microsoft, Google, NVDA, AMD. I'm talking about these kind of stocks. Okay. Those are predominantly the stocks that I'm trading, and those are the stocks that I trade, 95% of the time. Do I invest in other stocks? Do I day trade and scalp other stocks off of Momo and, volume and, what's hot? Of course I do, just like any other day trader does. However, my bread and butter is the Nasdaq 100. It is the triple Qs. I do trade stocks that are in the S&P 500 again, but the S&P 500 is so broad. It's 500 companies in the S&P 500, ranging from oil to banks to tech, to all sorts of different industries. And with the triple Qs is predominantly semiconductors and tech and the stocks that I like to trade. So the reason why I like trading the stocks on the Nasdaq 100 is because the moves are more violent, either to the upside or to the downside. For a day trader and a scalper, makes perfect sense to trade stocks in the triple Qs and the Nasdaq 100, because while on, let's say, maybe a stock in the IWM, the Russell 2000, maybe a smaller mid-cap stock, those stocks a good day for them might be 20 cents to $1. A stock like Tesla or Facebook or Amazon or Roku might have an average true daily range, meaning up and down, of 5 to 10 points. So in between that average true daily range, meaning that, a stock like Facebook today was up 10 points. So Facebook, for example, there's 1, 2, 3 points to make on the upside. And if it gets rejected, there's 1, 2, 3, 4 points to the downside. You can consistently play these stocks based off of technical levels to the upside and to the downside. So we know that generally speaking, stocks that are trading over the 50-day moving average are considered bullish. Things are going to be moving higher. So with that being said, is when we do have pullbacks, normally we can bounce these pullbacks off of rising support, being the moving averages, and play them back up to the upside. Versus if we were below the 50-day moving average and stocks are selling off and pulling back, we do not want to be trying to buy every single dip, because sometimes those dips do not get bought and the stocks break through that demand zone and trade to the next demand. I hope that makes sense. So today was a very significant day. This is the first close over the 50-day moving average, going all the way back here to September 23rd and the September the 24th. Before that, you can see we had 1, 2, 3 days where we were trading underneath the 50-day moving average before we had this gap down, and that's taking us back to September the 17th. So we are almost about a month away, 4 trading weeks later, to where we finally reclaim this 50-day moving average. We've had 1, 2, 3 pushes higher, a little bit of a gap up here, a gap up here off of this short-term bottom here. So the main thing that I really wanted to watch for on the triple Qs was when we got to this 50-day moving average, did we get rejected, possibly break through and then sell off on rejection, or were we going to close above? This is a very great day for the Nasdaq 100. Now what we need to see going forward is possibly, do we put in a little inside bar rest day tomorrow? Okay, which is going to be completely fine. anytime we have a big run up like this, normally stocks are going to push higher. And with the triple Qs closing above the 50-day moving average, we can expect some of these stocks in the NASDAQ 100 to start getting pulled up above supply. The one thing that we do want to stay away from is the stocks that are on these 2, 3, 4-day run-ups higher, because we don't want to chase these stocks away from the moving averages as they pull back into support. Because anytime you're scalping or day trading and you're chasing stocks that are 2, 3 days moving higher, generally are going to back test into support. We want to find stocks that are ready to confirm supply and put in a new high. So with that being said, what we will be looking for here on the triple Qs is a break over 372.86. With that being said, we do have the upper Bollinger Band here is going to give us a little bit of trouble around the 374 and 375 area. If we do put in an inside bar candle here, what we want to see is it possibly trade around sideways, close inside bar, and we do want to get another back test of this 50-day moving average. Could that come tomorrow or this week? Possibly, maybe not. This can continue to just run all the way up here to the linear regression channel 50 supply zone, and that price is going to be 377 before we have any serious major resistance area here. So that's one thing that we need to keep an eye on. A stock like Amazon, if we just take a look at Amazon, has been trading 1, 2 days higher. We are into supply here at the linear regression channel 50. I would realistically like to see Amazon clear out today's high price of $34.50, and after $34.50 it's going to get a little choppy, so we want to get over this $34.60, and you can see here over $34.60 has no supply ahead, which means that if we're going to trade from supply to supply or demand to demand, we have a lot of open air here. We just kind of want to let this play out here, because the last thing that we want to do is take a stock like Amazon that's been on an amazing 2-day run, buy the stock here, get rejected at the Bollinger Band, and come back down 20, 40, 50 points to backtest rising support. Okay. Another stock that we want to look at and stay away from, at least for the short term, is Tesla. Look at what Tesla's been doing. 27 points today, up 3.5%, $870. Tesla looks like it's a magnet to 880 and 900. It's just, this is extremely disconnected from the 5-day moving average. Okay. Rising support is trying to catch up with the price action, but that price is $830. So there's about a 40% move to the downside if we backtest support. And if we backtest support, that is still good. It's okay. Tesla can pull in 40 points tomorrow and be strong as day. And if you're not experienced or you don't really understand price action, a lot of people are going to see Tesla being on a, multiple day run up, pulls back 40 points, and everyone's going to say that it's going back to 600. Guys, stocks go up, stocks go down. This is a tremendous run. There is a little bit of a gap to fill here between 843 and 851. I'd like to see that gap get filled. I'd actually like to see it, possibly inside bar day tomorrow. Back test a little bit of support here, close this gap at around 843 and see what it does there. I really wouldn't go buying into Tesla's strength here. 876 is only going to give you a move to 882 before we have resistance here. I would let Tesla digest these gains, kind of let it, consolidate out a little bit, and then try to trade Tesla off of support. Those were the two stocks that I wanted to look at. Coinbase, same thing, massive move here. So I did make a video on Coinbase yesterday. I did actually trade Coinbase today. Great pivot. 297.07 double top. We are looking to confirm 297. Open skies here. Could we possibly get this next leg higher? Again, with 1, 2, 3 days with a gap to fill here, I would like to see a little bit of a consolidation rest day here, kind of base out a little bit and back test rising support. So these are the type of stocks that I'm talking about. We don't want to go chasing them 2, 3 days higher. We want to kind of let them do their thing, let them consolidate, let them rest, and then we want to buy them through that second passing. Stock like AMD as well, recently just broke out here. You can see the 114, 115 breakout here coming off of the highs of 122. I think that AMD is going to be a magnet going into earnings to 122 here. I would like to see us take out 116.89. That would be the top side break. If we do get an inside bar candle day tomorrow and the market wants to digest the big moves that we had in the triple Qs, that's okay. The more days that it bases out around 113 to 116, the better, because we know that next pass through 116, 117 is going to be a magnet to 122. Same thing with NVDA here. NVIDIA is running into a little bit of supply here, going back to this channel on the September the 23rd, as well as the upper Bollinger Band here. NVIDIA can get a little bit of a choppiness action going from 223 to 225. I think the first close over 225 is going to be a magnet to this 230 and 232 area to retest these all-time highs. Again, I think they run NVIDIA into earnings here, which is going to be on November the 19th. So let's definitely be on watch for that. Obviously, this level here at 230, breaking those all-time highs here, recent all-time highs on NVIDIA, is going to get this stock really moving. But again, I would like to see a little bit of a back test and consolidation. Let me just take a look at a couple more stocks here. Snow, same thing again, breaking out here, 340.77. See, like, for example, Netflix had this huge run up. Okay, we had this huge run up, back test of support here to the 20-day moving average. Okay, bounced off of that and put in a high of 646.84. And then we kind of sold off here into the 10-day moving average. So we had this nice push down, this nice pullback after this big all-time high run up to 646. Bounced off the 10-day moving average, and now we're kind of basing out here, consolidating. What I'm looking for is a 640 break on Netflix to retest 646, and obviously any break of 646 is going to run into 654. Definitely want to keep Netflix on watch over 640. Guys, I hope that kind of helps give you a general example of what's going on in the triple Qs, what's going on with some of these stocks that have been on 2 or 3 day run-ups.